Hey traders, happy Monday. Welcome to the weekly outlook. This is Chris Pulver here. This is the week of August 31st through September 4th. Yes. We are officially wrapping up summer trading, kicking off September. Volatility is starting to increase, which is a pretty promising sign. Tops and bottoms are likely near. Breakouts are happening. A lot of stuff to talk about today in the markets. Big news, if you're paying attention, big news out there is we have a 4-to-1 stock split on Apple and a 5-to-1 split for Tesla. So a couple of notables on both of these stocks. Since the last split in 2014 with Apple, it's gone up nearly 500%. Tesla stock has soared nearly 900% just this year. We were at $225 in August of 2019, and then just recently we were at over $2,000, actually $2,200 as of August 30th. So today's split is Tesla's first ever. They're doing a 5-to-1 split, and Apple is doing a 4-to-1 split. And lastly, July 2020, Tesla posted its first full year of profit. That was one of the big question marks around Tesla for so many years is it going to be a profitable company? Is it going to be a profitable automaker? Now it is the largest market cap of all automakers. I wouldn't even say major automakers because you have Ford, GM, Toyota, and others like Tesla just kind of came out of nowhere, but it's kind of, again, forward pricing to maybe Tesla is a battery company. Maybe it's changing the landscape with their open patents to have the big automakers buy Tesla's batteries and make them so they're in every car. So anyway, and Apple, of course, has been a mainstream, tech stock, which now, by the way, big tech is actually has more market value, more market cap value than the entire European stock market, which is crazy. So unprecedented times to say the least. This is, I'm sure, the big news that traders out there are following, and I'm sure retail investors are like, hey, Apple's cheaper, Tesla's cheaper, let me buy some of that. Wouldn't be surprised if they buy it. I'm not saying that this is a great time to buy other than it's cheaper. So do I still expect stocks to have some type of correctional move and volatility ahead? Yes. Our PE ratios, for the most part, are 23 to 24, which are again back up towards all-time highs. And I know that we have a Fed that's going to be accommodative. It's hard to drink the Kool-Aid when you think that what you're being told is this is different. But most investors that have been doing this for a long time will tell you it's not different. It's not different this time. And this doesn't end well. It's just going to be more of an extreme. So I'm not, shorting anything at this time. I'm not fighting the markets, but I'm picking and choosing my battles. And like I've said many times in these weekly outlooks, if you have cash and margin on the sidelines, if you have cash and margin at the ready, make sure you use them accordingly because you're going to have a lot of opportunity. I just hope we have dips and pullbacks to then put capital in. So I'm going to buy some more Apple. I'm going to buy some more Tesla. I will. But I want to see if we have a dip and not have it sit at these peaks where I already sit. Even with the split, yes, it's cheaper, but we're sitting at all-time highs, right? So as far as like the context of the technicals, we're sitting at these highs. So let's dive into the markets here. Let's get into the charts. Before we begin, this understands risk in trading. Please and always use trade capital only. If you're following me out there on social media, again, appreciate the comments. Click the like, click the subscribe button. Get the notifications for my videos like this and many more. I have my Keep It Seriously Simple video series that I'm continuing to do videos on. It looks like this. That's what all the thumbnails look like. You can find, I believe there's over 20 videos now on YouTube, free education with lessons like support resistance, trend lines, equity management, price patterns, adding to winning positions, finding the best broker, stuff like that. So good, solid education. Take a look, leave a like, leave a comment, and happy to help. If you're following me out there on YouTube, you can just look up my name, subscribe to my channel. I also post this weekly outlook on Instagram on the IGTV section, and you can follow me or message me on either a public comment with YouTube or send me a DM on Instagram at pulver.chris. All you have to do is follow me, and you can send me those messages. Okay, let's get into the markets. So get this out of the way. Let me bring up that fact I was talking about right here. A couple of noticeable things. Again, this was pulled right from Robinhood Snacks this morning. We had the movers from last week. So the Dow Jones up 2.5%, S&P almost 3.33%, Nasdaq 3.33%, Bitcoin, hanging out around that 11.5 number. I believe we poked above 12,000 briefly and then pulled back. The 10-year Treasury note is off the lows. We had like 0.56% on the 10-year Treasury note. It's up a little bit. Volatility slightly higher. Saw the VIX, the VIXY, and the VXX also jump a little bit last week. So I want to take a look at those charts. And snack fact of the day, this is crazy. U.S. tech stocks are now worth more than Europe's entire stock market. Unbelievable. Really, it is unprecedented times. These, the concentration of so few companies and have that much market cap is mind-boggling. It really is. It's really crazy. Or as said in Blades of Glory, it's mind-boggling. Okay, so let's talk about the SPY and the Q. So here's the S&P 500, which, by the way, we know made new highs. So the SPY went up and broke the highs from February of 2020, before, of course, its massive correction. And that's really, it's like correction because everything that happened in March was just a giant V bottom. So I'm going to the weekly chart here on the SPY. We can see it creep up to those highs. I'm going to go to the Q as well. So here we go. February highs right around that 340 handle on the SPY, and we're currently trading at 350 plus. Now, things that I continue to watch, we are now registering again overbought conditions on the daily chart, just like we did back in the first run this year. So we had that August to December rally last year, January, February making new highs in 2020. We saw disagreement, we saw overbought conditions. Yes, we had a huge sell-off. Okay, do we see disagreement here? Well, this is a high. This is a higher high. All of these are higher highs. Is it making lower highs in momentum? Yes. Did we register overbought? Yes. It's the end of the month. Okay, are we signaling a top in August for September to show a corrective move? Maybe. Maybe we have Q3 that continues the path of least resistance for now, and October brings the surprise, right? Keep in mind that all of this that's happening right now is still going to be an uncertain landscape going into the US election. Now historically, the markets have done a pretty good job of predicting who the president will be. So we will have to watch these indices closely. We will have to watch these instruments closely. But with the Fed staying as accommodative as ever, we had Jerome Powell give very dovish comments last week. I believe was last week Jackson Hole, or was the week before that? Let me check last week. Jackson Hole Symposium was last week. So he was just supposed to give opening remarks, but the markets just started to go nuts once again because it's like, oh, wow, the dollar's getting weaker. The Fed's so dovish. They're going to let the economy run hot, keep interest rates super low. Okay, well, we knew that was the plan. We knew from March and April with these, economic stimulus programs and quick bank rate cuts that happen, emergency cuts by, 1%, 3/4, 1%, 0.5%, all these cuts across the board. We knew that, interest rates weren't going anywhere. So does it change the forward guidance a little bit with the inflation target? Yes. But still, a lot of this was kind of priced in. So we'll take a look at the dollar index and I'll show you that. And again, all this right now seems like we're running to extremes. I have the most ridiculous bar counts and some of the highest highs and the lowest lows compared to the dollar, where I would expect from a technical standpoint, dollar strength in the very near term. Okay, now I'm not sitting here calling the top or calling the bottom, but if we have a trend line break, that's what I'm looking for. If we have bottoms and top patterns forming, that's what I'm looking for. This is the SPY. Here's a really simple trend line. So what are we going to do on the SPY? Nothing. Stay with this. Keep enjoying profits. Keep using trailing stop losses. But when structure breaks this trend line, we should have a correction. Okay, when structure breaks that trend line, we'll probably have a decent jump in volatility. So the SPY is at highs. The QQQ has done the exact same thing. So here's the NASDAQ, or the ETF that follows the NASDAQ, the Qs. And then I want to take a look at the VIXI and the VXX because they're also jumping from higher lows compared to March's levels. And we're looking for kind of a sustained volatility heading into the election. So let me get the daily and weekly chart up here in just a moment. So here's my daily chart on the Qs. Let me just take this trend line and extend it out. More aggressive trend line. Would I consider shorting the Qs? No, not really. Probably not until closer to the election. I'd be looking at some option plays, maybe late October going into November. Option plays on maybe an in the money position. If the Qs and the SPY starts to drop dramatically, if the election shake things up and we start to see some massive bearish structure. Or we just look at volatility, like playing VXX options or VIXI options. That really is a good play with possibly some short time horizons that could pay out pretty nicely. But I think right now you're just gonna have to wait. I'm not looking at these big predictions just in case. If an option expires worthless because I got the time wrong, well, I can change that. I can just look at buying the ETF. I can look at waiting for better confirmation and trade, a little bit more punctually. So here we are again. We just re-registered overbought conditions like we did back in January and February. We had this push higher, overbought conditions multiple times into early 2020, disagreement as well before we had our drop. Now, we have highs in price, highs in price, highs in price, stretching higher, ridiculous. It still is a broad information, obviously looking like it's getting higher and higher, but previous highs can become future support. So if this resistance or this high from 2020 that was broken, that is a level of structure right there. That previous resistance can become future support. Now, could we have a correction to that? Yes. Do we need a wave cycle or something to have a corrective move? Yes. Has it happened yet? No. Do we have confirmation to sell? No. So without confirmation, we shouldn't be calling tops. We'll just stay with the path of least resistance and keep riding these profits as long as we possibly can. You know, if it's running into overheated conditions, running into bubbles, fine. Protect it, but make sure you get paid before that bubble bursts. Okay, I want to look at some of those volatility instruments. Here's the VIXY, the VIXY. So we are coming off the right side of the trend line on the VIXY. I was wondering, you know, will the Fed or the stock market rally continue to suppress volatility a little bit? If I zoom in on price here, what I'm looking for, I do have limit buys on the VIXY actually. I'm trying to get filled around $15 on the VIXY and $10 on the VIXY, which is right around here filling this gap from this initial jump in March. I'm wondering, you know, are we going to have one little rally here, come back down maybe to one fresh low? I would love to see. Notice how the VIXY here is not oversold. Okay. Now we did register oversold here back in 2019. So I was following along with these instruments in late 2019, added to positions in 2020, made some really good profits in March and April. We had this extreme here. I did want to short. I actually tried to get some option plays on the VXX. I just didn't time it very well. I actually had already seen it move, and so I just let it sit. But good money on the way up, and now I'm trying to return the favor to see if this will go back up once again. Where at? Hopefully we can come back into 15 or 10. If we don't hit those levels, I will be watching this current structure very carefully. This could be a higher low to sustain, you know, implied volatility through the next 3 to 6 months. The VIXY and the VXX and the VIX are all month-to-month volatility instruments. So we will see what this level means. That's a previous high. We will see what the start of this area means here, and we'll see what that crazy high is from April. But I'm watching this level closely. You know, if stock markets continue to drift higher, this will probably come back down into another low, right? And it might use the right side of the trend line here until we get closer and closer into the election, and this might cause the jump from there. Okay? All right. So watching the VIXY, the VXX is virtually the same. It's a little bit more expensive. I think it's priced around $24, $25 right now, share price wise, $26.40. Okay, so again, watching for a trend line to break. I also have a limit buy in this one at the lows around 15 bucks. There's a gap to get filled around 15.50. So if I was to kind of draw this up, I'd like to see trend line break, retest of the trend line, or trend line break, retest the lows. Possibly see price drift a little bit lower, of course, into these awesome spots where I'd like to buy this. A sub 20, if we were able to buy the VXX below 20 bucks, that would be a great kind of level to consider a tester trade. And then $15 is back in towards the lows. So we had lows here around, you know, $12 and $13 back in February and March. If we can get back to those levels, awesome. And again, where would I look to return? I would look left on my chart. We would look for previous highs, and previous highs. So if we're able to get some trades between, you know, $18 and $15 that run up towards $40, that's a pretty good return on just playing some, you know, increased volatility ahead. I do want to take a look at the currency strength chart this morning. The JPY is crazy weak, and we are having a really sharp bounce this morning. Just this is 11 a.m., so maybe a little turn for the day. Dollar, same thing. Everything else, you know, not too much strength to the upside, but JPY extremely weak. But again, a lot of volatility probably coming. So I did talk about some levels on the JPY basket last week. I actually sent a video out to some traders. Prime Minister Shinzo Abe is actually resigning. And there was a kind of an intraday disruption last week where the yens were sitting here. I'm like, you know what? This could be a great spot for a JPY, an Aussie JPY top to sell this thing. You know, a little bit of a fake breakout, overbought conditions, coming back into equal highs and momentum. Do we break this trend line and sell off? Okay, I was actually in the CAD yen long, And man, what a mess. I mean, it was a really simple trade. It was, breakout, pullback, getting back in on a breakout here, looking to buy. I wanted to see if we can tag this high or get into this pocket around 82.50. So I ended up closing this trade out for a 3 pip loss. I just thought, we had bullish, crazy bearish, crazy bullish. It didn't invalidate, just so everyone knows. I mean, my stop loss was here in red, so it didn't invalidate. But noticing it was just, really wild price action for a couple of days, I thought the last thing I want to do is leave this trade out there for, 150 to 200 pip stop area when it might just be noisy. So I decided to close it. I can always get back in and reassess. It's kind of a no win, no loss situation on this trade. Just close it up and I'll reassess and try to get some better clarity on what to do next. Euro yen pushing up some highs. I have some robots that are long on euro yen and protecting profit. They're in the money. Moving the stop loss. I think I was up 100 pips and I locked in at least 50. And let me actually verify that here. So I think I have a stop loss in euro yen. Give me a second here. Euro yen. There it is right there. So this one might get taken out by my trailing stop. So I was in a trade here. So in a buy trade, and the trailing stop loss is now up, locked in for 100 pips. So price for my entry has gone up 150, and it's locked in for 100. So I'll get paid on that trade. It's up some bucks. That's pretty solid. So I'm in 1, 2, 3, 4 positions and positive on each, and let the robot take some profit there. So that's good. Let that one run. Other yen pairs, pound yen. Now again, I talk about this because I'm looking from a technical side. The yen, to me, makes sense for a sell-off, meaning that we see JPY strength. Why? Technicals. Are we up towards overbought conditions? Are we showing disagreement? Do we have this area of resistance ahead? Yes, and yes, and yes. So if we can spend some time on the right-hand side of the trend line, shake out some buyers here, shake out some sellers early, whatever. There's going to be a little bit of a fight for this top to form. But the more time we spend on the right-hand side of the trend line, I think the cleaner this trade gets to sell off. But without that confirmation, I am certainly not calling tops and bottoms on JPY pairs. New Zealand yen. This one is still range bound. We have this high from June. It had a mid-June sell-off. We came all the way back to the highs, made a higher low. It almost looks like we're doing something like this. We have equal highs. We have slightly higher lows. Now, this could be a topping pattern, which allowed this to pull back in to find previous resistance becoming future support, or this could also be setting up for a pennant, which from a bullish movement could be setting up in order for this breakout to continue to go higher. Now, I will say if I'm trading to the north, if I'm breaking out to the north, I want to be more aggressive on my stop losses to take profit. I want to be more aggressive on my stop losses to trap and eliminate risk. Otherwise, I mean, if this high holds, then we're pushing back down, and this is still a range-bound trade for right now. We're not in September yet. I'm very curious to see how this week plays out. So it'll be a busy week for the trading room. My Flex Trading Room, if you check the show notes here on YouTube, I have a direct link for my trading room if you're interested. We trade Tuesday, Wednesday, Thursday live together. We've tracked and traded over 27,000 pips this year. We were over 30,000 pips last year, but we sprinkled in some automation, which is helping us to grab some more pips. So we're at 27,269 pips right now. We do have some positions that are in that I'm expecting another probably 2,000 to 3,000 pips, hopefully in the next 2 to 4 weeks. Simply from positions we've had sitting out there and some good levels. Just need price to cooperate a little bit, so we're managing some small drawdowns. But anyway, New Zealand yen, that's one. Dollar yen is also back and forth. We're not clearing that 105 hurdle, right? So take a look at this. So we had the lows around 105.30. Have we broken below 105? No. Have we broken below this level here at 104.60? No. So this is still just wait and see. Do we break below 10500 to push down and retest 102? Maybe. If this just stays sideways, that's going to be a stay out zone. So I am wondering, and I talked about this last week, I'm wondering if this is the setup. Do we just continue to see this thing go sideways, have a big shakeout, and then there's more clarity on the right-hand side of this break? Does it stay in this channel? We could see how it could stay in this channel. And here's what my plan. I will really only buy this Aussie or this dollar yen if we come back into equal lows and I can get some amazing short-term bullishness off of that equal low. If we do come down and tap this level at 100, same thing, short-term bullish confirmation to get in and try to buy low. Okay, otherwise, if I'm going to buy this right now, no way. I would buy this on the right-hand side of the channel because it has room to run to 109. It has room to run back here to the highs around 110 and 111. but I want to see a clean breakout above this area. Otherwise, I think this is a stay out zone right now. Maybe look at equal lows to buy early and precise confirmation between 101.50 and 100. But I would want to see bullish price action and bullish patterns and systems confirming buy trades and not just take a random pending buy. Okay, other currency pairs that I'm really interested. So this week, I'll keep this video really short today. Trades that I'm loving. Okay, tops and bottoms I'm looking for. I'm looking for this. I'm not looking for that. I will just type it up here on the white chart. So I'll get back into the charts here and just start typing it up. Give me a second. I am currently short. So Aussie CAD, I'm in a sell trade. And I'm targeting, right now I'm targeting 93.25 or 9200, which is a few hundred pips lower. I am in an Aussie dollar sell trade. I know that the dollar's been beat up for the last 3 or 4 weeks now. We had that late trend in July that carried on through August. I'm looking for tops and bottoms to form. I know that can be a scary thing, but we have incredible technicals. Aussie dollar is extremely overbought. We're heading up into a 18127 resistance zone. We hit the yearly pivot from 2019. These are all good things. Okay, so I expect a near-term high to form. The euro dollar. Okay, euro dollar. I'm looking for sell confirmation. I think that resistance is right at 1.20. Could it go a little bit higher? Sure, we could have some fake outs, some wicks maybe right at 120 or 120 and change, but I'm still looking for a near-term top to form on the euro dollar. Pound dollar, same thing. We had a breakout last week. It made new highs, but if you look left on the chart for the pound dollar, we see 3,300 and 3,400 major resistance with overbought conditions, with disagreement between price and momentum. The same thing setting up like we had last time. Okay, other trades that I like. Euro Swiss, I'm looking to see if I can stay long. So I'm buying Euro Swiss, looking to target the yearly pivot at 110.45. Euro Pound, I'm looking for a breakout on that one to sell, trying to target 8,700 and 8,400. Yen pairs, I'm just going to kind of wait and play it out. I've got robots trading yen pairs. I'm going to start talking this week through some momentum breakout opportunities. One of my robots that trades any time frame, but I'm going to have it set up probably on the daily chart to get some breakouts here. Again, path of least resistance is already been established. If we continue to drift and break higher, then great. We'll just follow along. But September should be a decent volatility month. Again, it's Q3, so if we have a strong push to end Q3, I'm curious where that takes us. Going into October and November, of course, October is a very volatile month for stocks, historically speaking. And I think October is a really critical month to see how the markets are going to price in the election. So if we have an ugly sell-off in October, that is probably the market trying to tell us as investors and traders that looks like the markets might be bracing for a change in administration and a Biden presidency. If October just keeps it going like it's not going to stop, then I think that's a market trying to tell us that Trump and big business and don't stop the party, like everybody just keep drinking the Kool-Aid and riding those bubbles. And that's what the market could be telling us. But there is some pretty amazing evidence to suggest that the markets do a pretty great job of pricing in or predicting who actually becomes president. So October's that month. September might be that month. My kind of gauge that I'm using, I'm telling traders in my room this. If we see from August, September, October, if we are 2% or less, if the markets have only been able to take about 2% of gains or they're negative, then I think that's the market trying to tell us that Biden becomes president. If this run continues, where last week we saw 2+% gains, 3% gains in the U.S. markets, we're from the lows in April. The markets are up a ridiculous amount from the lows. We're up fractionally from the highs in February. So all that sell-off, all that recovery. You think about like the incremental gains that investors have. It's like you saw in 2018 a 27% correction, and then you have a 30+% rally, and everyone's like, oh wow, look at that, new highs. But you're marginally higher after going through a massive drawdown. Same thing, we went through a 30+% correction for a rally. Oh wow, look at that, new highs. We're marginally higher. Again, if you're not doing anything with that, but those opportunities to buy those dips, just that's why we want to have cash on the side, margin available to buy when it's low, buy when we have good opportunities. So for my outlook this week, this is really my focus. These are the trades that I'm in. These are the trades I'm active with. I will have some robots deployed as well to pick up some trades. If I see some sideways movements, I've got sideways trading robots, range trading robots. If we see some nice breakouts, I've got some robots following that as well. So it's small trade sizes, pretty diversified approach. I'm watching the VIXI, I'm watching the VXX, I'm watching the SPY and the Q, okay, the QQQ. And we're approaching kind of one day at a time. News-wise this week, I did notice for the week of, see, next, oh, that's, yeah, this week. So this week we have an Aussie cash rate decision, expected to stay the same. I will be reviewing the RBA statement. We have PMI numbers out of the U.S. We have Aussie GDP, so a couple of heavy Aussie news announcements early in the week. We have ADP non-farm. We have a non-farm announcement on Friday, September 4th. I will be hosting a non-farm / CAD employment session on Friday at 8 a.m. Eastern Time. Even if you are not a student or client at Market Traders Institute, if you're watching me on social media, if you'd like to join me for non-farm payroll, I'll hold a live session. I will post the link inside of my YouTube description. So go into that description. You'll see links to my other education. You'll see a link to my trading room, but get that registration for Friday, September 4th. The session will start at 8 o'clock a.m. And, we'll look and see what the numbers give us. We're looking at average hourly earnings to be forecasted for 0. We're looking at 1.5 million jobs, which, keep in mind, we lost over 25 million jobs back in April and May. So we're still on the way back. Okay, unemployment rate, if it's been, really, really high. Now they're saying like, oh, look, it's better than expected, but we have, nearly 10% unemployment. And we'll see this announcement come out simultaneously with CAD news as well. So there's no forecast on CAD for whatever reason. It seems like the Canadian goose didn't show up to punch in the numbers, but we might see how this changes through the week. And we'll see what the price is. That's the most important thing, is numbers can give us all sorts of guesses, but it's the price that really tells us what to do. If you're a trader, you should be following price action. That's what we're doing. Okay, so that'll do it for today. Like I said, if you are wanting to join me on Friday for the non-farm payroll CAD announcement, find the description notes below and get that GoToWebinar link. Also, if you want some other education out there, look for the links. If you want to join my trading room, look for the link. It's all in that description section. Check it out, and let's have a great week. I'm finally I've been looking forward to September for a while. Now it's here. It's the end of the month. Let's see if those tops and bottoms are forming. Those breakouts are occurring. The technicals are really, really solid. That's what I'm following a lot of my Forex trading, along with some robots helping me out. And then in the stock market, I am looking to buy Apple. I'm looking to buy some Tesla. I'm trading small. I'm just going to put in some basic positions to add to some. But with that split, I now have, 4 more shares, or 4 times the shares at a cheaper price. But I think if you're going to give it time, Tesla maybe, I'd say about 60-70% of like, yeah, Tesla should go higher. If it continues to operate as is and it's as beloved by the markets as it has been, then Tesla should be good. But Apple, one of the big mainstream tech companies, I will definitely add to my Apple positions. Okay, so I'll see you all this week in the trading room, and hopefully see a lot of you that are some fresh faces on Friday for non-farm payroll and CAD news. Have a great week. Talk to you soon, everybody. Bye-bye.